Firstly, just a little bit about copper, just a quick snapshot. I've already been talking to a few people over the last couple of days in respect of the copper market. Everyone's seen it come off a little. I think the copper market's behaving pretty much as we would have anticipated it to behave. But there's a few key things I think people sort of really need to understand about the copper market. It is the largest metals market. It's a 22 million tonne per annum market. It grows at 3 to 4%. Even if you take the downside and it grows at 2%, that means it needs 450,000 tonnes of new capacity per annum. 450,000 tonnes is equivalent of one of the largest copper mines in the world each year, even at a slow growth rate of 2%. So, we believe that the copper market is really a sector. It's a fundamental product. It's involved in a lot of industrial uses, but also, I think what a lot of people don't appreciate is that the new technologies of hybrid cars, electric cars, solar power, wind power are actually using multiples in terms of the copper that goes into each of those new technologies compared to the older technologies that they're replacing. So here's a couple of examples of cars. A new Tesla versus a car in the 70s, about 4 times as much copper in a new Tesla. And if you look at a coal-fired power station there, 1.3 tonnes per megawatt of copper versus 6.8 tonnes for a solar array, and for a wind turbine system it's about 5 tonnes per megawatt. So heavy industrial uses in the urbanisation and in new technologies. The graph on the right I think is a very it's on the left. It's an important one. If you look at this is the predicted market and price, and as I started off, copper is pretty much behaving exactly as we would anticipate it to behave. The market this year was projected to be in surplus by about 500,000 tonnes per year. I can tell you that surplus hasn't eventuated. The market's probably more like in balance, but the demand side's been a little weaker than anticipated. So the copper price, we would have predicted it to be somewhere in around the $2.20 to $2.30 mark now. It's a little weaker than that, around $2.10, but behaving pretty much as we would have expected it to behave given the short term outlook for the commodity. You can see there, if you just have a close look, 2017 through to 2020, the market goes into very, very significant deficit. So right now, there's no investment going in new capacity, but the market continues to grow, that large market, and we're forecast to be in very considerable deficit about the time that Asiamet's core project comes on stream. So that's why just remember that when we're actually talking about the projects that we'll go into now. So that's why copper. I think everybody should have some exposure to copper over the next few years. It's a great commodity to be in. Just in terms of Asiamet, Asiamet's a reinvigorated company. It's the old Kalimantan gold put together with some new assets. We've effectively got a pipeline of growth opportunities in copper. We've got a near-term development on the KSK property in Kalimantan. Around a 2 to 2.5 year lead time for that project, around 20,000 tonnes per annum of copper we're targeting to get into production quickly. I'll come onto the project shortly. We've got a large growth option, very large copper deposit at Butong, which provides us with longer term, medium to long term growth in copper. Capacity there, the project is capable of producing somewhere in the order of 70,000 to 80,000 tonnes per annum, but it's a large project with quite a long lead time. All the assets are located in Indonesia, very close to the key consumer markets, and a place that we as an operating team are very comfortable operating in. We've been there, the core team, Steve, myself, Mansour, have been there for over 20 years and very successfully built done a lot of exploration work, built mines and operated mines in the country. So extensive experience in the country. We've I think proven our capacity to take projects through exploration development into operations. Myself have been involved in 6 mine builds over the last 15 years. Steve been involved in some of the largest operations in the world at Freeport, taking things through exploration studies and into development and operations. So we've sort of got that DNA in us that actually is a mine builder. We're not purely explorers that are looking to get off the horse once the initial work's done. We will take things through and operate assets, and that's what we intend to do here. In terms of the investor appeal, I think, Asiamet, I think this year we've shown that we've knuckled down, we've got on with work, we've got a very clear strategy. We've built, quite a strong following. We've got a very good existing shareholder base who's very supportive of the company, investors who are there, for the longer haul, and can really see the value equation that we're looking to execute on here. So just to give you some idea, one of the previous companies that I was involved in as a founder, Oxiana Limited, in 2000, it had a market cap of $3 million, and by 2008, after 4 mine builds, it had a market cap of $8 billion, and that was the time that we sold out. So we're following a very similar strategy here, where the first asset that we're looking to build out at KSK, and then build the company off the back of that over a period of time. So a medium-term value creation exercise for shareholders. So a little bit of a snapshot here. I've talked a bit about my background. Steve Hughes is out at the booth. We're at booth number 39. Pop around and have a chat with Steve. Very experienced operator. He's the guy that actually runs all the operations on the ground in Indonesia. He's been there for 20 years and probably the best operator of assets in the country. Pop by and have a chat with Steve, and then the other guys on the board. Just in terms of our shares, I won't spend too much time on that, but we've currently got a market cap of about £8 million, about 570 million shares on issue. The largest shareholders there, so I think it's important to understand, TR Minerals Proprietary Limited, that's a private company that's owned by myself and a couple of other guys. Asiapac's one of my key supporters down in Australia. He's at 5. Board and management's predominantly me, 4.1. And Namarong's a large investor out of Australia, another good supporter of mine at 3%. The point I want to make there is I've actually put a lot of my own money into this business, probably more than anybody else. So I'm very incentivised for it to be a success, and very confident of it being a success. So just a quick snapshot on Indonesia. Indonesia, we hear a lot of day-to-day noise, month-to-month noise around Indonesia. As I said, we're very comfortable. We've operated there for a long time, over a 20-year period, very successfully. Indonesia's a mining country at the end of the day. It's 12% of GDP's mining. Some of the largest companies have operated there over the last 60 years, and the track record over a long period of time is actually very good. So some of the more high-profile issues or failures that I should say in Indonesia are often perceived to be Indonesian sovereign risk issues, but if you actually get behind those and have a close look, they're really commercial disputes between partners in projects. And if anyone wants to delve into that, I'm happy to walk you through. But we're very comfortable operating there. It's a safe, secure place. As I said, it's a mining country and a great place to operate from our perspective. So the core projects in the portfolio, just a very quick snapshot here. So on the right-hand side, you've got the KSK project. That's the core project in Kalimantan that we've been working on over the last 12 months. Looking to get that into production, as I said, quickly at a rate of around 20,000 tonnes per annum. It sits on the best form of title in the country, the most secure long-term title, which is a contract of work. That's a 30-year title with 2+2 extensions, so up to 50 years. And that agreement with the government covers from the first day of exploration to the last day of rehabilitation of any mine. Forestry, we've got forest permits to operate there, both open pit and underground on the core areas. And there's been over $50 million sunk on this property over the last 20 years. The project on the left is the big growth option at Butong, big porphyry copper. Currently we own 40%. We can earn our way to 80% by taking that project through development. It's a large, high-quality resource, but a big project with a much longer runway to get it through studies and into production. So it's the real big growth option that sits behind KSK. And in the middle, we've got a gold project called July. We've assessed that as being non-core to the company, and we're currently looking to divest of that and have some interest in acquiring that asset off us. So the plan there is really to either partner or divest of it altogether and recycle that money back into the company over the next few months. So just a snapshot here of the portfolio. The top half is the KSK Kalimantan project. As I said, we've got a good solid resource base there, indicated and inferred resources. That is currently, we've evaluated the resources and we're currently in the preliminary economic assessment or scoping study stage. There's some other projects there which you haven't heard anything about yet, but BKS, BKW, BKZ and the Baroy area, the results you can see there, absolutely sensational results, and any company would wish to have those results, and as I've said to a few people, you can probably float a company off the back of those results in their own right. Those prospects have had very little work, because the majority of that $50 million expenditure over a long period of time has been by major companies, and they've looked at these things and said, oh yeah, look, they might be 10 million tonnes or 20 million tonne things, which is, for a big company, just doesn't move the needle. But for a small company, these are very substantial assets, which in due course we'll follow up and do some work. So they're some very exciting things that we can look forward to going forward once we're actually in production and got some cash flow coming out of the BK main area. And the big project, Butong Beneath, I won't touch too much more on that other than say it's a high quality asset, and it's something which provides a big future for the company. So just the KSK property, it's in central Kalimantan. You see Palangka Raya down the bottom there. That's the regional centre of Kalimantan. Has 737 flights a day, 4 of those from Jakarta. The road goes down to the deep water port of Banjarmasin. Historically, this site has actually been quite a remote site because it hasn't had any access into the area. So that flight path is actually helicopter flight path, hour and a half each way. But what's happened as in Kalimantan, as it has in many other developing countries globally over the last few years, palm oil's come to Kalimantan, rubber plantations. So we've actually now, from Palangka Raya out to where it says road access, we've got a dual carriage bitumen road, and then from there that circuit road right into the core of the area is the photo shown. It's an sheeted all-weather road. So the access and logistics into the area, both for taking things in and bringing things out, is improved very substantially. And that's enabled us to look at these small to medium scale opportunities and really improve the potential economics of these projects. So, it's been a big change. We've got plentiful water there. We've got very supportive local the community and government, and Kalimantan did a fantastic job with the government community relations over a long period of time, so in very good shape. Importantly, for a country that's very densely populated like Indonesia, on that particular project we have very little in the way of villages. So just moving into KSK itself, the main area we've worked on this year is BKM. You can see all the drill results. You can see the resources there. It's about 65 million tonnes. We've got another area there, BKS, which you see the bottom part of the text. We've got some very good holes into, so we would expect to have significant additional resources there. And the area at BKW there, very strong soil and copper in soil, has only got one hole in it. So we're at 65 million tonnes now, but a lot of growth potential in terms of resources. What's important about these resources is that they're very shallow. So I'm just going to jump forward here. You can see they're all within 50, 60 metres of the surface, good continuity between holes. The copper mineralogy is leachable, so it's chalcocite, covalite, readily leachable. So we're looking at a heap leach, SXEW, low capital project. So very shallow, low strip ratio. Importantly, we've got 2 core areas. Probably we've got somewhere in the order of 10 to 15 million tonnes of around high grade 1%. And those areas give us the opportunity to mine and process higher grade at the front end of the project to generate, strong cash flows in that initial capital payback period. So we're fast tracking the project through the PEA, which should be delivered by the end of the first quarter, looking at a 20 to 25,000 tonne per annum project. So the timeline's there. So, as I said, good strong news flow. All the items in blue are the things that we're currently working on now, all the different components of the PEA. They'll all be pulled together. And I think it's important to understand this is a very important milestone for the company, because all the news flow that you've seen over the past year from Asiamet has been really about technical things. This is the first time that it'll all be pulled together as an economic analysis, and you'll see the real key value drivers around the project. So it's for me, it's a very significant milestone, and I think it should be a very significant milestone for investors, because you'll actually see the cash generating capacity and the real value that can be generated out of this project. So it's pretty simple, 20,000 tonnes, 25,000 tonnes of copper a year. We would expect, a C1 cash cost of somewhere in the order of $1.30 to $1.50. So if you think a margin of $1, 20,000 tonnes of copper, that's essentially $44 million of free cash flow a year out of this asset alone at that scale. So that's the sort of thing that we're looking at. We're doing all the work now to confirm that, and the PEA will be delivered at the end of the first quarter. Should confirm, I think, a very attractive project. So as I said, a lot of very exciting other things on the property to follow up. I've already touched on some of those. Very big growth project at Butong, some sensational results there. It's got a central high-grade core, high-grade copper, gold. It's currently at 515 million tonnes. It should grow to 750 million tonnes over time. Already had a scoping study done on it. Excellent infrastructure. Importantly, you've got a bitumen road, you've got power station nearby, a port nearby, only 60 k's away. So big growth copper projects worldwide, very few of them have this sort of infrastructure, close to the coast, power, water nearby, and that's what actually gives you a very low capital intensity project. This will have a capital intensity of somewhere between $10,000 to $15,000 per tonne of annual capacity. Most of the new copper projects globally are at $20,000 to $25,000 a tonne because they don't have the infrastructure. So they've got to build all this infrastructure themselves. So this is a major advantage for this project. And there's a number of projects which, show that this is clearly a very competitive project longer term. So just here you see Pukam. Pukam there was sold to the Chinese just recently for $1.4 billion in operations at 50,000 tonnes of copper a year production. Butong certainly has the capacity to be as good or better than that in due course. The gold project, I won't really spend too much time on that. It's quite an attractive little project, but as I said, non-core, and we'll look to divest. Asiamet, the new team, the company, we've been delivering to plan, met all our key milestones on time, on budget. We've got a very clear plan, a strategy going forward, which we'll deliver into, working extremely hard to deliver that. We've been able, because we've actually got down and done the work, we've been able to put the funding together. Very good, strong supporter base to enable us to continue to fund that moving forward. So this is just, I think, in summary, if you look here, the explorers, the study guys and developers and producers, we're essentially down here at the moment. Finders is another company in Indonesia doing exactly what we're doing now, but they're almost completed the project. And Central Asia, here on the AIM, it's got a market cap of £260 million. So the value curve that we're trying to do here is to take us from this point up through to essentially many multiples of the current value, and we've got a team in place to do it. We've done it all before, so we don't see any reason we can't do it again. So why be an investor in Asiamet? It's a summary here. So quality assets and people. I've been through all that today. Value. We're at the very bottom. We're at or near the bottom of the cycle. There's been $80 million spent on the property, and you've got an £8 million market cap. So there's 8 times sunk cost on the project compared to, you couldn't replace the work that's been done for the market cap of the company today. And we're at a very exciting time. We're just 3 months away from the delivery of the first time we've seen the economics around the project. So I think that's a real key important thing in terms of timing. Strong news flow related to that and going forward, and expect the company to be significantly re-rated off the back of the financials around the PEA in the new year. So thanks everyone for the time. Probably if there's any questions, maybe feel free to come around the booth 39. I'm happy to talk one-on-one. The VP of Exploration's there, and I'll move out of the way so that the next presenter can move. Yeah, booth 39. Yep. Thanks everyone.